Imagine a company whose stock just skyrockets over 300% in a single day. And not because, they cured a disease or struck oil or anything like that, but because of well, a peculiar corporate maneuver, an almost baffling strategic shift, and just this massive wave of social media buzz. What if I told you this astonishing surge might have absolutely nothing to do with the company's actual worth? The data we've dug into suggests exactly that.
Yeah, it really forces us to ask a crucial question, doesn't it? Is this some kind of visionary pioneering the brave new world? Or is it just a speculative bubble, teetering on the edge, waiting to pop?
Mmm.
So today we're going to try and pull apart the complex, often contradictory story of BioNexus Gene Lab Corp.
Welcome back to the deep dive. This is where we take a mountain of information, sometimes conflicting information, and distill it down into the most potent insights for you. Today, our mission is to really understand the incredible pre-market surge BioNexus Gene Lab Corp, or BGLC as we'll call it, experienced on July 1st, 2025. I mean, its stock catapulted over 317% to $12.83.
Just incredible numbers.
Right. Our source material is a comprehensive deep dive analysis, and we're here to explore why this happened and maybe more importantly, what it truly means for the company's fundamental value. So let's start by maybe dissecting BGLC's unusual business model. This company is a truly unique beast, I think it's fair to say. It's fundamentally a bifurcated business, sort of operating as two distinct companies under one roof.
And now with a surprising new third element thrown in.
Exactly.
And what's immediately clear, just looking at the baseline, is how small BGLC is. I mean, really small. Before this recent surge, it was a microcap company, typically valued way under $300 million, often hovering around just $5 million market cap.
5 million, wow.
So this means they're really minor players. They lack significant scale, lack widespread recognition in any other markets.
And those markets, as you said, couldn't be more different. Let's get into part one. Part one. Deconstructing the business, management, and financials. Chapter 1, Business Analysis.
Okay, first up we has Chemex Corporation, SDN, BHD. Let's call this the legacy cash cow.
This seems to be their primary revenue engine. It acts as a distributor of industrial chemical raw materials across Southeast Asia, places like Malaysia, Indonesia, Vietnam. In the first quarter of 2025, Chemex generated nearly all of the company's total revenue. We're talking like over 99% of it.
That tells you pretty much everything you need to know right there.
It does. It tells you it's a classic low-margin industrial distributor. They sell essential products like resins, color paste, used in everything from car manufacturing to industrial clean rooms. Its value proposition is pretty straightforward. It's a reliable supplier of these critical chemical materials.
Okay, then you have the complete opposite side of the business. mRNA Scientific, SDN, BHD. Let's call this the venture bet.
Right.
This is BGLC's pre-revenue biotech arm. It's dedicated to developing non-invasive liquid biopsy tests for early disease detection. The idea is analyzing RNA from blood for, I think, up to 11 different diseases.
Sounds ambitious.
Very. And financially, it's tiny. It contributed almost no revenue in the last quarter. Its operations are essentially just research and development, and it's funded by whatever cash flow comes from Chemex. So its value proposition is purely aspirational, right? It promises early, accurate, non-invasive disease detection, a huge promise for a small, unfunded startup.
And as if managing two wildly different businesses wasn't enough of a challenge.
Right.
The company recently made this radical move. They transformed part of itself into a speculative crypto asset holding. So you've got industrial chemicals, bleeding-edge biotech, and now digital assets, all under one corporate roof. And they operate in completely separate industries, each with its own unique dynamics.
Completely separate worlds. You look at specialty chemicals in Southeast Asia, the market is growing robustly. We're seeing around a 6% annual growth rate, driven by the region's rapid industrialization, infrastructure development.
Okay, so there's growth there.
There is growth, but the competitive landscape is incredibly intense. It's dominated by global behemoths, BASF, DuPont, names like that, plus numerous regional players. BGLC's Chemex is a very small local player. And while barriers to entry are maybe moderate, these larger players possess significant cost advantages that Chemex just can't match.
Okay, now let's jump over to the liquid biopsy industry. Globally, this is a truly revolutionary field, right? Rapidly expanding within personalized medicine. Projections are, exceeding $11 billion by 2030?
Astonishing numbers, yeah. But the competition is formidable. It's dominated by heavily capitalized companies, Guardant Health, Roche, Illumina, huge players. mRNA Scientific, in stark contrast, is an unknown, unfunded startup, and it's facing monumental regulatory hurdles. particularly with the FDA in the US, which demands lengthy, complex, extremely expensive clinical trials.
Right, that FDA hurdle is massive in biotech.
It's everything. Which brings us to a fundamental question. Does BGLC possess an economic moat? That durable competitive advantage that protects a company's profits from competitors.
And the analysis we looked at is pretty clear on this, isn't it?
It is. There's really no discernible economic moat here. Chemrex operates in a commodity-like business, makes it a price taker. mRNA Scientific is a high-risk venture without any proven intellectual property yet. They have negligible brand strength, no significant cost advantages, and clients in the chemical business face low switching costs. It's just a tough environment without any clear competitive edge.
Okay, let's pivot then. Chapter 2, management evaluation. Let's shift our focus to the people actually guiding this company. The management team, led by CEO Suling Samtan, has certainly been, well, busy.
Busy is one word for it.
They successfully navigated a NASDAQ delisting threat. They did this by executing a 1-for-10 reverse stock split earlier this year, April 7th, 2025. This action reduced their shares outstanding from about 18 million down to 1.8 million, allowing them to regain compliance with NASDAQ's minimum bid price rule by May 1st. So, okay, they showed capability in crisis management.
They did. But what's truly unusual, maybe even concerning, is the method they used to ensure shareholder approval for that reverse split. They created a single Series Z convertible preferred stock. And this one share, get this, came with an unprecedented 5 billion votes.
5 billion.
5 billion. Specifically designed, they said, to mirror common stockholders. But this effectively guaranteed the proposal's passage. It's highly unorthodox, and frankly, it raises serious questions about shareholder democracy and, well, governance.
Yeah, that definitely raises eyebrows. Talk about an interesting way to secure a vote. On a perhaps more conventional note, they recently appointed a new CFO, Ms. Chung Set-Free, on June 17th, 2025. She brings 25 years of experience.
Which sounds good on the surface.
It does sound like a positive step, maybe strengthening financial controls. However, her reported compensation is remarkably low, like around $3,500 per month.
Very low for a public company's CFO.
Right. This could point to severe resource constraints, maybe, or as our analysis suggests, it might just be an attempt to create a kind of veneer of credibility at minimal cost.
And when we look at the bigger picture, you see this pattern emerge. It becomes pretty clear that management's public communications, their strategic actions, they've overwhelmingly centered on financial engineering and stock market mechanics. Navigating the reverse split, implementing that weird Series Z stock, announcing the Ethereum treasury, ensuring NASDAQ compliance.
All about the stock price and staying listed.
Exactly. This focus noticeably overshadows any real operational progress in either chemicals or biotech, and it strongly implies a shift, maybe a strategic pivot, towards short-term market survival and attracting speculative capital, rather than building long-term value from their core businesses.
That strong focus on financial maneuvering leads us right into their capital allocation decisions, doesn't it?
It does, directly.
Yeah.
The single most significant, and I'd say frankly controversial capital allocation decision was the board's approval back in March 2025 to make Ethereum, ETH, the company's primary treasury reserve asset.
Which is just...
It's a radical departure from traditional corporate finance, where capital preservation is absolutely paramount.
Right. I mean, they explain this decision, citing Ethereum's institutional credibility, the potential maybe for a 3-5% staking yield, and its perceived role in the, future of digital finance.
Sure, that's the justification. But the inherent risk is exceptionally high. Standard corporate treasury management prioritizes preserving capital above all else. BGLC, instead, chose a single, highly volatile and highly speculative digital asset. This means their financial stability is now directly dependent on the wild fluctuations of crypto prices. It effectively transforms BGLC into a de facto crypto holding company.
So they're kind of like a crypto ETF now, almost.
In a way, yeah, mixed with chemicals and biotech dreams. Now, they did make some smaller, arguably more rational investments like $450,000 for in-house color paste production for Chemrex, maybe improve margins there, and an outsourcing agreement to reduce biotech testing costs by over 25%.
Okay, sensible moves. Sensible, but small compared to the Ethereum bet. And crucially, as a cash-burning company, they're not paying dividends or conducting share buybacks, which is appropriate given their finances, but it highlights the reality.
So with all these strategic shifts, this crypto pivot, what does this tell us about how effectively they're actually using the capital they do have?
Well, the numbers don't lie here. Their normalized return on invested capital, or ROIC, is a deeply negative, negative 24.60%.
Minus 24%.
Yeah, this isn't just a number, it's quantitative proof of long-standing unprofitability and incredibly inefficient capital use. It means that historically, they've destroyed nearly 25 cents of value for every single dollar invested on an annual basis.
That's a massive red flag for any traditional investor,
A
surely.
huge one.
Okay, let's dig into those financials more. Chapter 3, financial analysis. Let's get right down to the raw numbers that, as you said, paint the clearest picture. Right, and a thorough examination reveals a company that has enough short-term cash. Okay, they can operate day to day, but it's plagued by chronic unprofitability, declining revenues, and persistently negative cash flow. Remember, before that recent surge, its market capitalization was minuscule, $5.0 to $5.5 million. That underscores its microcap status. The $12.83 surge we saw, purely speculative, completely detached from these underlying figures.
And their trailing 12-month revenue, it stands at around $9 million, almost entirely generated by that low-margin chemicals business, Chemrex.
And critically, this revenue is decreasing. They're experiencing a consistent quarterly decline, around 10–12% year over year. Not a good trend.
No.
The profit margins are incredibly weak, too. Gross profit margin hovers around 12–14%. That's razor thin, typical of a commodity-like business. Operating profit margin is a massive negative 50%, huge losses from core operations. And their net profit margin consistently shows deep losses.
Consistently unprofitable.
Consistently.
Yeah.
Losing money on every share. Now, the price-to-sales ratio, pre-surge, might have seemed low at about 0.5x, but actually, it's probably appropriate given their negative growth, those dismal margins, and the high inherent risk.
Okay, fundamental question. Are they generating any cash from their operations or just burning it?
Burning it. Absolutely not generating cash. The company is consistently burning through cash. For the trailing 12 months, their operating cash flow is negative $1.46 million. And a business that cannot generate cash from its own operations is, well, fundamentally unsustainable. It relies entirely on external financing just to stay afloat.
Okay. So in terms of overall financial stability, what's the summary? We know they have a consistent history of unprofitability, no positive net income in recent years.
Right. The balance sheet health is, let's call it a mixed bag. On one hand, they do have strong short-term liquidity. That's a key strength. They had cash exceeding $4 million at the end of 2024, a current ratio over 4.0x. So they can meet their immediate obligations, pay the bills.
Okay, that's something.
It is. There's some conflicting data on their debt to equity, but the evidence seems to point towards relatively low leverage, which is also good. However, that decision to hold Ethereum as a primary treasury asset, it introduces extreme and unpredictable volatility right onto their asset side. It turns their balance sheet into a potential roller coaster ride.
Yeah, depending on crypto markets.
Exactly. And no, they don't pay a dividend, nor are they in any position to even think about doing so.
Right. So valuing a company like this, with all these red flags, this unique structure, the crypto, it sounds incredibly difficult.
It is indeed challenging. Traditional metrics like PE ratios are useless here because they have negative earnings and negative cash flow. So to try and get to some kind of intrinsic value, we applied a sum of the parts discounted cash flow model, a DCF. This is a pretty standard valuation method. Tries to value a business by forecasting its future cash flows and discounting them back to today.
Okay, and what assumptions went into that? Because assumptions are key in DCF.
Absolutely critical. Our key assumption here was using a very high discount rate, 18%. That reflects the extreme risk associated with BGLC. It's microcap, it's unprofitable, it's speculative, operates in emerging markets, and has these volatile crypto holdings. Lots of risk factors.
18% is definitely high. So how did the different segments, Chemrex and mRNA Scientific, fare in this model?
Well, Chemrex, the chemicals business, was modeled as basically a low-growth distributor. We assumed a modest 2.5% perpetual growth rate, kind of in line with GDP. mRNA Scientific, the biotech arm, that was valued as the high-risk venture it is. We modeled zero revenue for 5 years, then a hypothetical ramp-up. But crucially, we assigned it a very low 10% probability of success.
Only 10%.
Only 10%.
Perfect.
This reflects the incredibly high likelihood of failure due to the immense clinical, regulatory, and competitive hurdles in biotech. Think of it honestly as a lottery ticket. The odds are very long.
Okay, a 10% weighted lottery ticket. So what did this complex, risk-adjusted model ultimately reveal as the estimated intrinsic value for BGLC?
Based on this educational model, the estimated intrinsic value for BGLC falls within a range of $1.50 to $2.25 per share.
Wow, 150 to 225.
Yeah. And this value is primarily driven by the company's existing cash on the balance sheet, its tangible book value, and a pretty modest valuation for the struggling chemicals business. That biotech lottery ticket, given its low probability of success, contributes very, very little to this intrinsic value estimate.
And this $1.50 to $2.25 value stands in stark contrast to that speculative pre-market price we saw of $12.83.
A profound and, frankly, concerning disconnect.
Okay, let's move into the market dynamics. Part 2, market dynamics, ownership, risks, and conclusion. Chapter 4, market sentiment. So if the fundamentals are so weak, right, and the intrinsic value is calculated somewhere down near $2, what on earth is driving the market's perception and this massive price surge above $12?
Yeah, that's the multi-million-dollar question, isn't it? Market sentiment for BGLC isn't driven by traditional Wall Street analysis. Why? Because there's simply no coverage from major research analysts. None.
No analysts covering it at all?
Nope. Instead, what you have is this potent brew of company-led narratives, intense retail investor speculation, often fueled by social media, and these complex technical market dynamics. The media tone. It largely just reflects the company's own press releases. They amplify narratives like the NASDAQ compliance saga, that attention-grabbing Ethereum treasury pivot, framing these as visionary innovations.
Okay, this is where it gets really fascinating, I think. Let's talk about short interest. Normally, that's a measure of how many investors are betting against a stock.
Yeah.
The official NASDAQ short interest figure was pretty modest, like 1.28% of the float.
Right, but Ganny T, and this is the critical insight here, this figure is highly misleading.
How so?
The true story is found in the cost to borrow BGLC shares. That cost skyrocketed to an astronomical 95.35% annual rate.
95%, just to borrow the shares to short them.
Exactly, an incredibly prohibitive cost. It indicates extreme scarcity of shares available to borrow. And what this does is create what's known as a synthetic squeeze. This is where the cost to borrow shares becomes so astronomical that investors who have bet against the stocks, the short sellers, are effectively forced to buy the shares back simply to close their positions, regardless of the company's actual fundamentals. That buying pressure drives the price up.
So the shorts get squeezed out purely by the borrowing cost, not necessarily because the company got better.
Precisely. This, combined with momentum-chasing retail traders, on platforms like StockQuits, maybe Reddit, that was the spark that ignited this parabolic rally. It fed on itself.
And that July 1st surge sent the stock price exploding far above its 50-day and 200-day moving averages, which is a classic textbook sign of an unsustainable parabolic move. Pure speculation, characteristic of a bubble driven purely by momentum.
Textbook bubble dynamics.
Okay, let's look at who actually owns this thing. Chapter 5, ownership structure. Who actually owns BGLC? Because the ownership structure, as you know, can tell us a lot about a company's stability and how its stock might behave.
Yeah, and the ownership structure here is, well, revealing. It's highly concentrated and strikingly lacks the kind of institutional presence, the big mutual funds, pension funds, that typically stabilizes a public company's stock. This is a classic recipe for volatility.
So, no big institutions.
Institutional ownership is essentially non-existent. There are 0 13F filers. That means no major institutional investors, like large mutual funds or hedge funds you'd recognize, hold any significant stakes. The minuscule 0.88% institutional holding that is reported likely comes from high-frequency trading firms, just jumping in and out, not long-term investors looking for fundamental value. This is a significant red flag for anyone seeking stability.
Okay, no institutions. What about insiders, management?
Conversely, insider holdings are exceptionally high, over 51%.
Wow, over half the company.
Over half. Now, while this often means management has skin in the game, which can be good, when you combine it with those questionable governance practices we talked about, like that Series Z preferred stock.
Right, the 5 billion votes.
Exactly. It strongly suggests an entrenched management team that's pretty insulated from outside influence or accountability. They control the company.
So this combination, very high insider ownership, almost no institutional ownership, and then just a diffuse base of retail investors. What does that mean for the stock price?
It means the stock's price is dictated much more by day-to-day sentiment, by momentum, by social media buzz, rather than any kind of rational, fundamental assessment. It's basically a playground for speculative trading, not a bastion of stability.
Makes sense. Okay, let's try and wrap our arms around all the risks. Chapter 6, risk assessment. Let's break down the risks and opportunities using a classic SWOT analysis: strengths, weaknesses, opportunities, threats. First, the strengths of BioNexus Gene Lab Corp. What have they got going for them?
Okay, their primary strengths are that strong short-term liquidity we mentioned, over $4 million in cash, current ratio over 4.0x. They can pay their bills. They also have that dual market exposure, chemicals and biotech, which offers at least some degree of diversification. And importantly for the stock price recently, that first mover narrative advantage with the Ethereum treasury strategy, it successfully captured speculative attention.
Okay. But the weaknesses seem considerable.
They are chronic unprofitability, negative cash flow, reflected in that deeply negative ROIC. There's a complete lack of any economic moat protecting them from competition, an over-reliance on a speculative retail investor base, and those serious concerns about corporate governance, especially regarding the Series Z stock. Plus, management's focus just seems scattered across three very different demanding industries.
Right. What about opportunities? Is there an upside here?
Well, on the opportunity side, the biggest, but again, lowest probability one, is that massive multi-billion-dollar liquid biopsy market for mRNA scientific. It's a true lottery ticket, right? High impact if it ever pays off. There's also the potential for continued industrial growth in Southeast Asia, benefiting Chemrex. There's the potential maybe for Ethereum to appreciate significantly, boosting the balance sheet, and always the possibility of strategic partnerships down the road.
Okay. And the threats. What could really derail them?
Intense competition from global giants in both the chemical and biotech segments is a huge one. They're outgunned. Critical regulatory failure risk for mRNA scientific tests is paramount. If they don't get approval, that venture is worth zero. Then you have macroeconomic factors. High inflation could squeeze Chemrex's already thin margins. High interest rates make capital raising much more expensive, which disproportionately impacts speculative stock valuations like BGLCs.
And geopolitical risks.
Yeah, when we connect this to the broader picture, you could imagine, say, hypothetical new U.S. tariffs in 2025 disrupting global chemical supply chains. That could increase raw material costs for Chemrex, putting even more pressure on margins. And just general geopolitical instability can cause wider market volatility, impacting not only BGLC stock, but also the value of its Ethereum holdings. It could also dampen overall industrial demand in Southeast Asia, where Chemrex operates.
Lots to worry about. Okay, let's bring it all together. Chapter 7, conclusion.
So after digging through all this, what does it all mean? BioNexus Gene Lab Corp is, well, it's a truly complex, highly speculative entity that just defies easy categorization, doesn't it?
It really does. It's this multifaceted hybrid. You've got a legacy industrial distributor, a pre-revenue biotech venture/lottery ticket, and now, effectively, a cryptocurrency holding company. The investment thesis, really, for any potential investor would depend entirely on which of these identities they choose to prioritize or believe in.
Okay, so let's sketch that out. For the optimists, the bulls, what's the narrative? What's the bull case for BGLC? The bull case, I think, leans heavily on technical factors and turnaround hopes. Management did successfully avoid delisting. They created this low-float, high-borrow-cost stock structure that became ripe for short-term volatility and potential short squeezes, which we saw. It's also seen as the biotech lottery ticket, mRNA Scientific's long-shot potential in that revolutionary liquid biopsy market. Huge potential if they succeed against the odds. And thirdly, for crypto enthusiasts, it's become a kind of leveraged crypto proxy. If you're bullish on Ethereum, maybe BGLC offers high beta exposure, meaning its stock price could move even more dramatically than Ethereum itself.
High risk, high potential reward based on factors mostly outside the core business. Okay. Now, for those grounded in traditional fundamentals, what's the stark reality? What's the bear case?
The bear case is that the company is fundamentally broken. It possesses no discernible competitive moat. It has a long, consistent history of unprofitability. It relentlessly burns cash and, according to the ROIC, quite literally destroys value over time. Its strategic pivot to a highly volatile Ethereum treasury is a radical departure from prudent capital allocation. And those questionable corporate governance practices, like the Series Z stock, raise serious red flags about management and shareholder rights. Ultimately, the market price, especially that July 1st surge to over $12, seems entirely detached from the underlying business fundamentals.
And just to bring it all back to value one last time, what did our intrinsic valuation model tell us about BGLC's worth?
Right. Our sum of the parts DCF model, which explicitly risk adjusts that speculative biotech venture with that low 10% probability of success, yields an estimated intrinsic value in the range of $1.50 to $2.25 per share. And again, that value is primarily anchored to the company's tangible book value, its existing cash position, and a very conservative estimate for its struggling chemicals business.
So, okay, let's wrap this up. For you, our listener, what should you take away from this deep dive into the curious case of BioNexus Gene Lab Corp?
I think BioNexus Gene Lab Corp presents a classic case study of extreme speculation in today's market. That $12.83 share price on July 1st, 2025. It was largely a product of a technical market anomaly that synthetic squeeze due to high borrowing costs, significantly amplified by a powerful, attention-grabbing crypto narrative. This price appears profoundly detached from the company's estimated intrinsic value. Now, while there's a bull case for maybe lottery ticket-like returns driven purely by short-term market dynamics or a crypto surge, the undeniable fundamental weaknesses, the chronic unprofitability, the lack of competitive moat, the questionable strategy, the governance concerns these present extreme risks. For a traditional value investor, someone focused on predictable earnings, strong competitive positioning, reliable cash flow, BGLC falls far, far short. The risks vastly outweigh any rationally quantifiable prospects for long-term value creation here.
Yeah, this deep dive really makes you consider that stark difference between a company's underlying value, its fundamentals, and how the market sometimes chooses to price it, especially in today's social media-driven world. It really forces us to ask, in an environment absolutely flooded with information, how do you filter out the noise and find the true signal? We hope this deep dive helped you gain some clarity on BGLC, maybe provided some aha moments. If you found this valuable, you'll love what we do over at Stock Analytics AI. Remember to like this video and subscribe to the Stock Analytics AI YouTube channel. For just $4.99 a month, our members get priority deep dives on specific tickers why you request. We're actually covering all of the S&P 500 stocks over the next few months, and members get exclusive priority access to those deep dives. And if you just want a one-off deep dive on a particular company, simply drop us a super thanks right here on the video, and we'll prioritize your request.
And just a standard reminder, this analysis was generated by an AI system. It's intended for educational purposes only and should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions. Knowledge is most valuable when it's understood and applied wisely.
Absolutely. Thanks for joining us for this deep dive. We'll be back soon with another stack of sources to unpack for you.